Okay, welcome everybody to this evening's forex trading live market analysis webinar with ACI Securities. My name is Duncan Cooper. Matthew, hi. All right, just to give you a heads up, tonight's webinar is forex trading live market analysis. Just to let you know what's coming tomorrow, we've got price imbalances, introduction to smart money concepts part 2 tomorrow evening. So it's coming up tomorrow at 7 p.m. And on Thursday, more live market analysis at 7 p.m. Sydney time on Thursday. Okay, so that's what's coming up for the week. So before we get into tonight's webinar, if you can read through the risk disclaimer, that would be great. And while you're reading through that, if you're on a YouTube live stream, I cannot see the chat. So you're more than welcome to join us in the webinar to chat with me, but I can't see the chat while I'm doing the webinar. As well, for some reason today in my area, Australia, the internet doesn't seem to be working as quickly as normal. I don't know if that's because it's Anzac Day and everybody's at home streaming TV shows, but hopefully I'm coming through loud and clear. But if I'm not, I can only do the best I can. Hopefully I'm coming through okay. All right, so just read through this disclaimer, everybody. Matthew, hi. I can see you coming in on the chat and the question box. If you've got a question, you can go to the chat box or the question box. I can see both. All right, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACI Securities. And I'm a full-time forex trader. I've been trading the market now for more than 15 years, mentoring for more than 10. If you want to contact me, my email's on screen there. And if you want to follow me through the week at our website, acy.com, you can get me at the Market News tab on our YouTube channel, ACI Securities Australia. And if you want to follow me personally on my Twitter or LinkedIn, then there they are on screen as well. We have our Telegram channel. If you want to get up-to-date posts, they do hit there first. So to get access, just contact Nathan Bray. I'll put his details in the chat momentarily, but his email is on screen. As well, if you want to get access to my chartlettes and templates that I use, just contact Nathan. If you want to set up a demo account or even set up a live account, then contact Nathan. He's the go-to man. So I will put his details in the chat. I'll do that now before I forget. All right, let's go in the chat. And as well, tomorrow evening, we've got the Inner Circle webinar at 8 p.m. Got postponed from last week, but it will be tomorrow evening at 8 p.m. Normally, it's just open to account holders, but what we're going to do is anybody that's in the webinar at 7, we'll hand out the webinar invitation to those attendees, and you can move along to the Inner Circle webinar at 8. I'm going to go through a new strategy. And usually people in the Inner Circle can jump on the mic and talk to me. So we usually have a question and answer kind of affair where you can jump on the mic. Nathan controls who can jump on the mic and talk. But other than that, we are going to go through, in the first part of the webinar, I'm going to go through a new strategy. I'll give you a PDF to it. And I might go through this in more detail in further webinars, but I'm going to introduce it in the Inner Circle webinar tomorrow evening. So just come along to the first webinar to get access to the second webinar, and I'll hand out the link during the first webinar if you're not a client. If you are a client, well, if you attend the webinar, you'll get the link anyway, but just contact Nathan if you haven't got it. I'm pretty sure they're sending an email out, but if you don't get an email, just contact Nathan if you want to come along, okay? All right, let's get into it. Now, on the news front tonight, we hasn't been much news until coming up on Wednesday midnight, but we did have quite a nice move up of some of the pairs to the US dollar. But with that in mind, we do have US news coming out on midnight, CB consumer confidence. And then tomorrow we've got for the Aussie crosses, we have the CPI data. All right, for Aussie crosses tomorrow at 11:30 a.m., it's going to be highly volatile, potentially. All right, so that's what's coming up over the next 24 hours there. So bear all those things in mind. Let's get to the charts. All right, I just want to start with the dollar index now. Let's get rid of my fib off that because I'm just monitoring if we can hold there at support. But we have a decline from the top there. And this weekly area of support here is kind of holding at the moment. 2 weeks ago tried to follow through and couldn't. Last week we had an inside candle. This week we have tested that area once more. Are we going to follow it down and through, or are we going to hold on the bottom? I mean, we have a higher top up here and a lower bottom down here, theoretically. Rejected at the top, rejected at the bottom. All that really means to me at the moment is, and somebody's telling me my chart's not showing, so just excuse me one moment. All right, how's that? Can you see my chart now? Great. All right, thanks for that. Occasionally I make the mistake of sometimes I have to change something so that PowerPoint moving into my charts works, and sometimes I don't have to do anything, and sometimes it doesn't want to work properly. So, all right, let's start from the beginning. All right, dollar index first up. So as I was just saying, we have moved to theoretically a new high here, but then we've moved to a new low. So over the last, this is the new week, but over the last 2 weeks, we've rejected an inside candle, and we're once more testing this weekly level of support. So it's mixed because we've moved to a new high and we moved to a new low. So the market has a little bit of uncertainty about it. And when you look at pairs to the US dollar, for example, at the start of this week, the euro dollar and the pound dollar has started moving back up again, whereas the Aussie dollar and the New Zealand dollar really haven't, and they've been moving down once more. And the dollar Canadian's been moving up, and the dollar yen's kind of sideways. So we're not seeing total correlation. Pairs to the US dollar aren't all moving in the same direction. But, you know, so it is questionable at the moment. Are we continuing down now, or are we holding? There's an uncertainty there. And the day chart here, day chart is showing you lower tops and bottoms. It's just a question mark here. Are we holding on support here? The US news may determine that factor. So a little bit of an uncertain point there on the chart on the dollar index. To the S&P 500, this is my weekly area of tops up here. This is a monthly range from high to low. And there's all these weekly tops up here that were fading. Now we did put in a reversal week last week. If we break the low of last week this week, that potentially is going to start to maybe show that we want to move down from that resistance area once more. I'll just move it to the monthly chart. You'll see here's the monthly high to low. Are we once more fading at the 79% level here to move down? It's a little consolidatory, as you can see, through the last, I don't know, since this high came, the first high came in there. That was in December, and this high over here came in September. So certainly since December till now, what, 3 or 4 months, we've been rather sideways, only just managing maybe just to keep a gain just potentially, but we could be topping out up there. So, you know, it's a little bit mixed. Same as the dollar index, a little bit mixed. Maybe that S&P 500 is just maybe topping out there. We don't have a downtrend yet on the daily. We need to break a low and put in a lower bottom, lower top. So we don't really have that yet on the major swing points there. All right, let's get into then, we'll first have a look at the euro dollar. Now, all last week, I just take a few lines off here. Last week, we were holding at this top until we broke above this week. So there was actually 5 days in a row we failed at 109.73, and I was starting to think maybe we're topping out there. to put in a lower top, but clearly we've been moving up. Yesterday, and we have actually moved above what was the yearly high before this false break. So we are coming up to challenge what is the yearly high up here. Now, from a higher time frame perspective, the weekly, this is actually last year's whole range, high to low. And we put that week up. We got fractionally short of the 79% level, so that's the key level to watch. We are very high up for the buyers at the moment. And yep, I can see you got your hand up there. If you've got a question, just put it in the chats. But other than that, I see you put something in the chat too. Okay, you can see the screen. So the thing I want to make aware to everybody is, well, we are very high up within the range of last year. So we're at high prices relative to the whole range of last year. Yes, we can keep moving up, but just be aware we are at expensive prices in relation to where we traded from high to low last year. Doesn't mean to say price can't go up, because at the moment this day chart trend is up, unless over the next couple of trading days we put in a lower top here, that may start to change things. So what you want to watch at the moment, I mean, this is very high up in the, in this move. Really, if you thought this was still going up when it was holding at 109.73, you needed to be buying intraday dips last week. You don't want to be buying up here near the high of the year. So at the moment, if we're going to continue up, we don't really want to see a close today or tomorrow back below this top, which is at 110.33. So we'll actually dip below it intraday today. We're just back above it at the moment. If we can't close above that top today, that doesn't look good for the buyers. Even though we moved up yesterday, that does not look good for the buyers. That nice big candle up yesterday could just be a move up to where all the sellers are, or it could be true buying and we're going to break up and through. But if it's true buying, we really should carry on. We should have a positive day today and carry on above that 79% level over the next 2 trading days. If we don't, then we could be further moving back down the range. All right, so for our chart at the moment, it's an uptrend. I did, as I was going to bed on Friday, when we couldn't hold the news dip, starting to see these higher bottoms, I did start to feel like, okay, maybe 109.73 wasn't going to hold and was going to come up and challenge that 110.33 level, which we've done. So we are in a fire uptrend here. Really needs to stay above 110.33. So if you've got a very much of a bullish bias, you could be looking at 110.33 for support intraday to be a buyer on. Okay, but it is high up there. All right, so we have been getting support at the central pivot point today. And we do have that US news coming out. So price may not do too much now before the US news at midnight. But once that news comes out, whatever price does, this is the key line in the stand at the start of the week now, 110.33. By the end of the day, are we above it or are we below it? You can watch intraday for further tests of 110.33. If you see price action come down, tries to dip below, and then comes back up, and you can start to draw in a trend line. That might be enough for you to be able to say, okay, we're getting support there to buy, to move up. All right, but if we get a clear break, so if we put a swing point in here, we get a clear break of that trend line, we are probably heading back down towards 109.73, which was resistance last week. It could be support this week. All right, you can see there yesterday, 5 days last week, we were rejecting, wanting to sell down from 109.73, but yesterday it became support here for Monday's low. So you could watch for more support coming in there through the week. Personally, if I'm on the buy side of this pair, I don't really want it to be below 110.33. So if it moves below there, whilst this could be support, I don't know if that can be support for the long term. It may only be support for the short term for a bounce intraday. And this is the key level to watch for support at the moment. All right, so if you don't feel that's too high up, then you could be looking for a buy on that pair that meets your trading setup. But the clear line is 110.33. For me personally, it being very much at, let me just take these lines off. I'm on the fence at the moment. I thought it was topping out. It's very difficult for me when we're at the 79% level or a fraction short of last year's range to actually put my buy hat on because we're very high up. I just feel like the oxygen for the buyers could be running out up there. All right, but I mean, you may have a different thought process. You may think, okay, it's going to go up and test last year's high up here at 140.94, and you think this is still cheap buying. All right, so I'm just sitting on the sidelines at the moment, seeing how that reacts up here, because I know they've got that 79% level there. So on this pair, which is highly correlated to the euro yen, we've been a fraction short of that 110.75 level. So today when the news comes out, so move to the 4-hour chart, there's that level of support at the moment. We could stab up there today at the 79% level when the news comes out. And if you start to see it fail up there, you've got this high up here. This could be a failure point for this particular pair. And as I say, this is very high up. And the reason why I keep saying that is because if you move to the euro yen, then we go to the daily chart. This is extremely high. We've actually tried to trade above last year's high today. Couldn't hold it. I move to the monthly chart, look left. Then you can see another significant monthly high here. It's worth putting that one in now. 149.778. Don't know whether we're going to get there. All right. Now, trends are up on the weekly, but we're clearly testing last year's high. And major highs like that, last year's high or last year's low, you'll get selling pressure at the high, buying pressure at the low, because that's the highest price anybody was prepared to pay last year. So if you bought up there last year, you were the last of the buyer last year on the euro yen, which kind of sucks if that was you. All right, so that's the highest price anybody paid last year. So do you want to be buying at the highest price that anybody paid last year? Probably not. Now, it doesn't mean to say that we're going to get a long-term reversal up there. We just have to watch, because this still structurally isn't on a day chart, is in an uptrend. Structurally on the 4-hour charts, there's a minor low broken there, but I'd like to see a much more significant low broken to change that to a downtrend. We don't have that yet. So this could have already got support from this area of support. 147.75 is this area here, this old double top. That could be acting as support now. If you don't feel this is too high up, then we could still come down to that level once more. This level could be an area to watch for you set up to be a buyer on support. But breaking back below 147.75 isn't good for the buyers. All right. So at the start of this week, we pushed above that high. We've actually tried to trade above. We have traded above, but we couldn't hold above last year's high. If I start to see 4-hour structure change trend here, we could see a reasonable decline from last year's high in the short term. Now, whether or not that's going to be a failure point for long-term decline, we'll have to wait and see. We may just get support here at 147.75 and then continue back up. But in the short term, we are seeing a significant sell-off. And when we see the 50-minute chart there, you can see that as we got into London, some very aggressive selling here. So you could be monitoring that drop. And the 79% level isn't too far away from that all-time, not the all-time high, but last year's high at 148. Where's 148.40? Let me double check. All right, 148.39.9. It's almost 138.40. All right, so if you feel like price has topped out up there, Slav, I don't know whether I can see on there, I know you like to sell these high levels. I don't know whether you got in up there. I was watching it. was going to put a video out this morning about selling up there, but I thought I'm definitely pushing the counter trend trade there, but it has failed up there. So maybe we could get a rally. If this keeps moving down, keep dragging your fib down, but we could see a 79% retracement pattern form. A further failure up there, because what we've created up here is kind of a triple top on the 15-minute chart. Triple top decline. Can we get a rally back up close to that area once more? You see it further fail up there. That could be a very good sell opportunity to offer you a very good risk to reward to the downside, especially if you get a significant decline. All right, so thing to be aware of there on the euro yen and the euro dollar is that we are at significant high points. Day chart trends haven't changed their trend yet. I guess is the thing is, but buyer beware when we're at such high points. I'm not seeing a trigger to sell yet, but I don't like to be buying at such high points. So, and as I'm talking, the euro yen is declining there. So I'm guessing maybe the euro dollar, what's it doing? All right, fraction weakness on the current candle. All right, so that's the euro pairs covered. Let's get it. We might head into euro pound while covering the euro pairs. All right, so there's a level of resistance across here. Very range bound. For the last week, almost 2 weeks now, we haven't quite been able to get up to 88.65. We've got 88.60, 88.64 here, 88.61. That's the line of resistance that the market's respecting. So if it was to come back up to that level, I don't know whether it can actually get there, but that's the area to watch for a reversal if it stubs into that area. On the 4-hour chart here, it is just holding to an uptrend, higher bottom to another top just. I would be watching to see if we can have one last contact up there and a rejection. If structure starts to change now, that is a lower top and that's a higher bottom. That price, that candle there has just traded to a higher point. But if we break that low, so we can break that low, then look for a rally to sell. All right, that 4-hour structure is just holding to an uptrend, just. All right, heavy, price can't take this high out. That's last week's high was a pip short. And we may be getting short once more there. So we might just start to see the 4-hour trend turn down there to move down, back down towards support at 87.54. All right, let's get into the pound pairs. We'll take the pound dollar first. All right, now, just going to point out a pattern. You might not know of it, called the Gartley pattern. You can go and I'll type it in the chat if you don't know it. Gartley. There you go. If you go and Google it, then you'll be able to get a full explanation of it, a pictorial view, etc., that you can study. But basically, it's when you've got an uptrend formed, potentially, within maybe a downtrend on the bigger range. So what I'm looking at here is maybe this was the bigger move. I'm on my 4-hour chart at the moment. That's where I've got my pattern kind of showing. In fact, I might just do a top down and then we'll get to that pattern in a moment. All right, so from the last year's trading range, we've been contending with a 62% area for quite a while in here. I don't think I've drawn that on the last year's trading range quite accurately. There we go. There's a 62 line up in here with this double top that formed. Last 2 weeks previously, we've been rejecting and holding underneath. Yes, we are above this double top area at the moment. We're at 124.67. That area is at 124.44. So for 2 weeks, it was trying to tell us that maybe we want to hold there. But of course, we're above there. Doesn't say we'll be above there for the rest of the week, but clearly at the moment, we're above there. So, we're at high prices, but we're holding above that double top area at the moment. Day charts, we did last week put in a lower top here. but now it's put in a higher bottom, gone back to another top. Slavia is saying maybe head and shoulders. Are you saying like a left shoulder here, head? Maybe a right shoulder could come in there. That's possible. It's mixed to slightly up at the moment because now it's put in this higher bottom, put in theoretically a higher top, but it's all within this high to low structure here. All right, and it is a little bit hard going for sure. So the pattern I was showing, I was going to talk about on the 4 hour was the Gartley pattern, where looking at that range down, we just found at 79 today and the 12500 level area that was at 125.06. But the Gartley pattern is when you have a bigger range there, so you draw your fib across it, and then you get an upward movement this way. So you get a movement up. You get a pullback this way. So that often will rally back up to say the 62 level. Then this pulls back to the 62 to 79 level of that decline. And then price goes up to the 127 extension and the 79% level, or the 62 level. In this case, it's the 79. So you draw a fib from that range up. You'll see that the 127 extension of this upward move overlaps with the 79% area of this downward move. That's called a Gartley pattern. So I'm seeing the potential of a Gartley pattern there for failure. It has been, when it hits, then it's held. So if you trade it up there, 125 level, 79% retracement level there, we most definitely have had a failure. You could be risk-free by now. So that was quite a logical area. We could, I think Slavia was saying, this could be your left shoulder, head, right shoulder over here. So it's a little bit, it's a fraction short of where the right shoulder could be if we're using the actual left shoulder, but sometimes the right shoulder can come in at 79 levels. So it's all valid. It's an area where you would expect sellers to come in today potentially, and we can see some form of sell-off. All right. Now, as I said, the structure and data chart is a little bit difficult. It is actually put on a higher bottom to a higher top, but it's very congested. And that move up yesterday could have been the last of the buyers. Who knows? All right, so let's just move it. I might have to clear that off now because it'll look messy on my lower time frame, but and all these fibs overlapping each other gets a bit busy. All right. Ultimately, this could just be a 79% failure up here. Now, the highs that we've taken out yesterday, this area here at 124.74. We're not holding that at the moment. And by the end of the day, if we're going to hold an uptrend here, the 124.48 level that we pretty much was holding at resistance last week needs to be support. If we've moved above that yesterday and then we're back below it today, that's just a false move up. All right, and we could have had the market maybe getting driven up to where the institutions want to sell. We've broken above some highs yesterday, these highs here. Retail stops are going off to buy. Retail stops are going off to get out shorts. As those buyers are getting triggered, institutional traders potentially could be selling. You've got all these highs to the left here. So there's the potential of a topping out process maybe up here. All right, to the 15-minute chart, you can see once we move below last week's high, 124.74 area, move below, it is becoming a topping out area. See how it became support there? Support here, but we move below, now it's becoming resistance. That was an intraday area to watch for the flip. We broke above resistance there yesterday, became support, still support, it's flipped there today. So I would, if you want to get short this pair, look to that level. If you want to get short as a seller, that level now needs to hold on a retest. If you want to be a buyer, that area needs to break and be support. All right, that's the level the market's suddenly now monitoring. All right, so what side are you on? Do you think we're too high up to move to the downside, or are you on the side of the buyers? All right, there's either side of the market there at the moment. Now, when the news comes out later in the day, and Slav is saying it could possibly break through. Yeah, it could possibly get back above there today. I would, my preferred level would be to see what the news brings at midnight. And obviously the better level to look to engage at is this level up here, where we've already failed at today, but price may not revisit that level. 125.00 to 125.05. Often when we get a move it happened on the euro dollar today, it happened on the pound dollar today. Often when we get an early move in Asia, where we try to go to new highs, we trade above the high yesterday and we start to move up close to very high levels, and then we get a failure. This is very common. Tries to move to a new high in Asia, can't hold it, and then we sell off. Vice versa in a downtrend. We're trying to move to a new low area in Asia, and then we can't hold it, and then we totally reverse. All right, so you can monitor those levels. Pound yen, it is holding at the moment last week's high. Is it creating a little mini double top up here? This is at very high levels. Area I was watching for a possible run up to was 168.72, which is this high here. So we've got a couple of weekly highs. That's a monthly high there at 168.72. We're just stalling short of those two weekly highs. Trend on the daily there is still up. So, but if we get a nice candlestick pattern, at the moment it's creating potentially a dark cloud cover double top price pattern, dark cloud cover candlestick pattern. You can see that this drop down here, price has come all the way up to the top of where the drop started up here. It's filled all the imbalance. So we had a triple top and then a drop. Price has come back to the point of the drop. So now with that drop filled, we could be topping out here to trade back down the range. All right. But it's been a strong uptrend. You need to see a clear signal. I'm just sitting on my hands waiting to see if it gives you a clear candlestick pattern, because by the end of the day, we may not be negative. We could be back up. All right. So what does the end of the day bring? I'm just going to watch that, see what it looks like from a candlestick pattern point of view by the end of the day. It would, of course, be good through the week. Let's say we fail here. So that creates a double top there. We don't know what price is going to do through the week, but from a setup from a price point pattern, if we can move down, it would be excellent. Then and I don't know where it's going to move down to, if it does move down, but if it does, be excellent. Let's say it moves down to there. It would be excellent then if it came back up. Put in then a lower top to your double top at 79% retracement. Could be a 62% retracement. But that would be, double top, we drop down and change the trend, and then we can sell a rally. All right, so have we got the start of a reversal forming there? I might just leave that on, see what that looks like Thursday. All right, let's head over to Aussie yen. Now, I was actually looking for that pattern on the Aussie yen today. I put it out on Telegram. We've dropped down here. That's actually the range of last week. I was looking for this level up here, 79% level against monthly resistance. But of course, we haven't been able to get up there. Now we do have the CPI data coming out tomorrow, so it is worth just keep dragging that down. We could spike up on positive data, back up to monthly resistance tomorrow. You never know. All right. But at the moment, we go to the weekly chart here. We had a nice rejection last week. I was just looking for a trade back up inside the rejection candle, but it's not come. We've already now broken last week's low. are we actually putting now in a lower top for a move back down to these support areas? So there's the weekly range that we've been retracing back up, 62% possible failure there. That low there is a monthly low and a weekly low. So we failed in this daily to monthly resistance area. All right. If it's going to be kind, it might spike back up into the area for a rally sell after the CPI data. So I will just be, as I've just shown you, I'm just go back to the day chart at the moment. There's a monthly low here at 87.01. Price could well be wanting to retarget that level. Another monthly low level at 86.24. That will be false broke down here. So we could well be moving down from that top, down like so. So getting on board. So it's good to sell a rally. I mean, at the moment, it wasn't able to get back up to the daily level. So this is looking rather weak at the moment. But when the data comes out tomorrow, I would just be monitoring that wherever that finishes as a low, draw a range in, and I would just see if you could get a fortuitous friendly spike up to the 79% level. That would be an ideal scenario. All right, you can monitor that. I mean, other things to monitor is it doesn't get that high, but it just simply comes up to 90.15. Today we pretty much topped at 90. So maybe it may just spike up to 90 tomorrow if we got some good data. All right, but you know, if you're an experienced trader, you don't want to be selling at the low of a move. You always want to look to sell a rally. So it looks like we failed up there at the 90.51 area. Can we sell a rally? Can you see your setup to trade in line with that movement down? Aussie dollar. All right. Now, let's get rid of that line for a moment. We're a bit consolidatory here. We keep holding on this weekly level support here. Can we move down through? I mean, we move down, we put this top in here. Because we've got an outside candle here, my indicator's saying this is a significant top and a significant bottom, but I would not look at the bottom. That's a potentially significant top at the moment. Can we break down through support is the question. So that level there at 66.29 is the level to watch. All right, on the day chart, we're just breaking through that level of day support today. Can we this week break below 66.29 and get out of this consolidation? So if you are short, if you can't convincingly break 66.29, we've got the CPI data coming out tomorrow, so that may do it depending on how it prints. All right. Now, depending on what it prints, it could just drop and break 66.29, depending on how it prints. That would need to be negative for the Aussie. So that would mean that maybe inflation has dropped, I think, for the Aussie to drop. If inflation goes up, then that's potentially forecasting an interest rate hike, which could give a positive bid in the short term. So it doesn't mean to say that that will hold a move up for the long term. But levels to watch would be up here for a spike up at 67.93. So, a spike up to 67.93, 6,800, if the news brings positivity. Or, if it's very negative, this will just drop. And to me, in long term, this is still a downtrend bias from the weekly chart perspective. So it'd be good to look to sell a rally. You won't be able to short it if it just drops because it'll just move. It'll start to want to try and break 66.29 and 65.64. So I would just see where you can get a higher rally to sell tomorrow. In the short term at the moment, clear level that we've broken below is 66.81 day support and last week's low here. So if you wanted to engage today, this is the area to look for intraday resistance at the moment. This is the area that we've broken down and through today. So that would be the area to watch for. Is it going to hold as resistance? You can see yesterday we moved back above these levels, those two levels here. Got support here to move above, but it's now switched back the other way. All right, so, last week's low, 66.81, maybe up to 67. A rally today. When we get the CPI data tomorrow, 67 is quite high up here. I would say this is the whole of today's move at the moment. Probably 67 is out of the question today. So I'll just correct my conversation. I would just be watching at this area at the moment. All right, moving on to New Zealand crosses. Now this has been very consolidatory, the New Zealand yen. However, it has been offering nice shorting opportunities up at 63.53 here. I've discussed that level countless times when price has been down, because ultimately when you go to the weekly chart here, it is discreetly telling you that we moved to a lower bottom, we have put in a lower top, which is a 62% retracement. There's the 62 level. So potentially over time, this could be moving like so. So your opportune time to get in. I know when you look at the day chart, price action doesn't look that exciting whatsoever, but up here is where you want to sell. Now, I don't know whether price can get back up there. Maybe it can. It's not that far away from the area. It's 100 pips away at the moment, but it could just stay range bound for another week. It is lower top, lower bottom. You could draw a fib from that high to low. Just view it on the 4-hour chart. And I put this out today saying, a 79% rally would be ideal within that range. So, getting a move up to the 79% level, it actually overlaps with the 62 level of the weekly range. Yes, if you could start up to 83.53 would be great, but pick your battle of how high price maybe you can get for a rally. But now that weekly structure is definitely starting to forecast potentially discreetly telling you that we're putting in a lower top now on the weekly. I just showed you that maybe we're putting another lower top in on the Aussie yen, and these two pairs are highly correlated. You may have missed the opportunity to sell at a higher level at the moment, but you can keep monitoring. All right. Now, potentially, let's just, if you can get a sell higher up, there's a long-term positional play where we could get, this has been consolidatory for a long, long time. If we can break support, if we get a push down and support breaks, this could be going all the way down to maybe this area here. All right. This has been consolidating for a large period of time. From large periods of consolidation, you get strong trends. All right. So this is long consolidation. This was going to break one way. And if it's to the short side with that weekly downtrend forming, you could see a significant break, but of course you need to be in it so that you're positioned for the break. So maybe we're going to get a long-term break to the downside at some point. All right, that's the resistance area. If you can stab into that area. Other than that, watch up there at 79 level at 83.31 would be ideal. New Zealand dollar. Now I put this through on Telegram this morning. We did actually trade up to the 62 level. This is my 4-hour look, so we can get back to this in a moment. Structure in the day chart, we're in a downtrend here. Just hit an area of day support through here. But notably, we've broken below this weekly level of support, 61.91, which has been offering support. We kept dipping below, back above, dipping below, up, dip below, back above. See how the rallies are getting shorter? Back below, short rally. You know, maybe now 61.91 is now flipped. It could be resistance. For our charts, there's a range of last week. Area I put out to watch was from the 62 level to the 79 level. Within that, you've got that weekly resistance level now potentially. It had just traded to the 62 level early in the day. When the news comes out today, yes, it could get back up there. That would be the area we'll be watching, 61.87 up to 62.04. That's your resistance area there. Maybe it's already failed there and it won't get back up there. All right, maybe you've missed the boat early in the day, but you can watch that level for a spike when the US news comes out. All right, dollar Canadian. It's continuing its advance. It's not really giving too many pullbacks. So your weekly chart perspective here, the rising line of support, putting in another higher bottom on the weekly chart there. Higher bottom, higher bottom, higher bottom. There's your higher top. I'm going to put a fib across there. We just dipped just below the 79 level. So I'm anticipating we're moving up to re-challenge this high maybe. We do have a weekly high here and a monthly high in the way of moving all the way up there. All right, so we're trying to move above daily resistance at the moment. It hasn't really had a pullback since it's had one negative day and we've been keeping moving up. So some strength in there. So this is where we've got some different correlation going on. Like the pound was moving up yesterday, the euro dollar was moving up. Yet the dollar CAD's moving up as well. You know, if pairs to the US dollar are all perfectly correlated, dollar CAD should be moving down. So there's some uncorrelated affairs going on at the moment. All right, so dollar CAD's moving up. I don't like to be a buyer on the, really we haven't had a day down yet since this day started an up day here. So first up day was that one to the right in terms of having a day up above a high. So 1, 2, 3, 4, 5, 6, 7. 7 days at least where we haven't had a down day. All right, so how many days can it go up before it has a down day? Maybe it's due a down day. So I'd just be monitoring for a down day and then look for an opportunity to get along. Now, it doesn't have to give me what I want. It may just have it could just have another 3 days up. If you're prepared to be a buyer without it having 1 or 2 days down, then you want to monitor, the fib range on the 4-hour chart, look to buy a pullback within the 4-hour range, 62 level, 79% level. Okay. So it may be just a little bit high at the moment, but you need to work out yourself where you want to pick your battle. It would be nice, just from a pure support and resistance point of view, even though we are maybe overextended, it would be nice from a day chart perspective here that we clearly move above that resistance level. Then maybe we have 1 or 2 days down and we pull back to support. Broken resistance becomes support for a move up. That's a more logical approach to take. Of course, when you're watching for a logical approach, sometimes price won't give it to you, but it's quite high up there at the moment on the upward curve. All right. Dollar franc. Now, dollar franc cannot get a bid at the moment. It is back down, testing the low of the move. So, while this has been what I would say correlated to the euro dollar and the pound dollar yesterday. And what is the euro dollar doing at the moment? Euro dollar is nowhere near the high of its day. This is at the low of its day at the moment, testing the low of the move at 88.59 support. Whereas if you flip back to the euro dollar, It's not at the high of its move today. There's a bit of disparity there between correlation. And pound dollars pumping its, trying to get back above 24.74 there for the buyers. As I said, my preferred level would be up here to engage. If you think we're reversing with that Gartley pattern, getting back up to the high area of the day would be where I'd like to look for an opportunity. So dollar franc, back to that. You know, who wants to sell at the bottom of the move? Not me. You know, if we're going to continue this downtrend at the moment, here's a 4-hour chart. It would be nice to be able to sell a rally. Simple rally would just be looking at the range on the 4-hour chart. 62 level, 79 level in there. You know, moving back up, the monthly level that we've broken below, 89.26. So just to show you, we are very low down on Swiss franc. There's a monthly low here that we are back below. That's the daily level, and there's a further monthly level down here. So we are at very low levels within where price has been for a good 10 years. All right, but at the moment, it is holding its downtrend. You know, you want to sell a rally if you want to trade that. And slightly soon got some Swiss franc news coming out. So don't see any specific news for Swiss franc other than the chairman, Jordan speaks. I'll be yellow or orange. I don't really look at it. I'm not seeing any high impacting items that could affect that. For whatever reason, at the moment, dollar franc has just got, you know, an amazing sell on it at the moment. So, you know, not a pair at the moment. I think that you want to stand in the way of. If it did get back above 89.26, that monthly level that we've broken below, then yes. So at the moment, I think I would, you know, if you want to trade this pair, grab a fib across your 4-hour range. You know, you don't want to sell it at the bottom of the move, and you certainly don't want to sell it on support. If you want to keep in line with that overall downward momentum, draw a fib across the range on the 4-hour chart and look to sell a 62.79% rally. At the moment, the monthly resistance level lines up in between those two parameters at the moment, and keep dragging the fib down if it keeps moving down. Now, price getting above 89.26 through the week is not good for the sellers, because that is a clear line of monthly support. All right, I actually did think when we moved back above 89.26 up here, see how it became support there, I thought we were going to move back up the range, but no. So let's took control once more. All right, so watch 89.26 to be resistance if it can rally back to. Dollar yen. Now, dollar yen, it is showing an uptrend there at the moment. Some of the yen pairs, though, are potentially topping out. Well, all of them are maybe giving a bit of a signal. They're at resistance. You've got the pound yen might be creating a minor double top on the day chart. Euro yen is at last year's high, false breaking. Aussie yen's declining. New Zealand yen's a little bit weak within its range. And the significant level, I'll just take some of these lines off so we can go back in time. So the monthly chart, we have, you know, on the move back up on this monthly candle, there's that significant monthly high here. Yeah, have we ultimately topped out on the dollar yen, and are we, you know, not wanting to move back above that top? We do have the Bodge monetary policy statement on Friday. So I guess that will determine maybe a bit of direction, depending on what gets said. Sometimes nothing happens from the Bodge and the market just doesn't react at all. And sometimes they come out and say something and then the market just goes berserk. But at the moment, like very historical monthly high that we moved above last year, starting to be maybe critical resistance potentially there. All right. Try to move above in previous months. So in February, March, we try to move above. March, we obviously reverse back below. This month, we've been 4 pips short of that level. So the fact that the market stops 4 pips short means the market's clearly watching that level. All right, it's not some coincidence that the market stopped there. All right, and from my significant tops and bottoms, we have a lower top, higher bottom. I've been looking at that as potential head and shoulder pattern inverse, left shoulder, head, right shoulder, but we could be putting in a lower top here. We could be just wanting to be mixed and range bound here at the moment. All right, from the day chart perspective, until we break this lower here, we could hold the uptrend to move further up. Let me put my lines back in. So last week, I think it was Tuesday, I said, watch a pullback to daily, weekly support here in this area, which I think it may, hang on, that was Monday, that were Tuesday or Monday, I think Thursday, I said that watch for that area to be support. And you can see we've moved into it on Friday and held on weekly support at 133.62 weekly support. With this weekly low here. Day chart, this area here. All right, so this is where you have to get these levels in because it clearly respected it last week. 133.62 is the number. So that's what it looks like on the 4-hour chart. So the 4-hour chart is actually turning to a downtrend here at the moment, even though the day chart is still an uptrend. So it's a little bit mixed. Yeah, the level I'll just be watching is 133.62 here if you want to trade the dollar yen through the week ahead of the monetary policy statement Friday is 133.62. Does that hold? You've also got daily support at 133.74. So that whole area there. And we could get support there today when the news comes out from the US. The price not wanting to respect that level and slicing through this week, then you look for that area to be resistance. The 50-minute chart. All right, see today, you can see the uncertainty on some of these pairs. It came up to want to move up today, earlier in the day. But then it changes complete intraday trend and now it's at the low of the day. All right, some of these pairs are not giving a clear directive mode at the moment. It can be difficult. But this is, on the current 3 candles here, this is overextended. So this trading straight down into this area, and then you see some positive, you see a positive candle. We do have an imbalance over here. Going to go through those tomorrow's webinar. Now, the bottom of that imbalance is in this area of support. That would be a great area to watch for a reversal today, if we can get down there. As well, drawing a fib from there to there. All right, we're getting to close to 79. So coming into this area, do you see you set up for a reversal back up? Potential support there. See, as that's moving down at the moment, when I look at my other screen, euro dollar is moving down. The dollar to the yen is moving down and the euro dollar is moving down all at the same time. That's what I'm saying about correlation at the moment. So that would mean that the euro yen is definitely moving down, because if the dollar yen's moving down, that means yen's strengthening and the euro is weakening as well. So then it's going to get a double decline. It's going to decline at a double pace. All right, so having a heavy sell-off from that last year's high. So that's worth taking note. If you've not really studied last year's high, last year's lows, here's a prime example of when we test last year's high, we start to see a significant reversal intraday. All right, let's get into gold. Now, this is what we mapped out on the Friday chart last week, Thursday. Could we form this head and shoulder pattern? It's not quite come to fruition yet. We haven't got up to a higher level, but we created a little double top there, and we're maybe putting a lower top here to that top. So I don't know if we can form that pattern. Let's have a look at the high time frame. What I do know is today we are testing the weekly level of resistance and failing. So to the weekly chart, this high here, 1998. So anything above 2000 at the moment is obviously difficult. Structurally down the weekly chart, we are in an uptrend still. Structure on the monthly chart, as I've been saying, we are in a downtrend. We could be putting in a further, that's top, lower top. Is this another lower top? That's kind of a double top. That is a lower top to that top. Is this a further lower top in that area? All right. So at the moment, 2000 is heavy going, but this is still holding to a day chart, sorry, to a weekly chart trend in terms of higher top, higher bottom, higher top. On the day charts, you do have a lower bottom, lower top. Today we are testing and holding. You know, there's a high here. Is the weekly resistance level. We've only just traded up to the weekly resistance level. So we could be failing there. You know, if we get another spike up there, news time spike up and it can't hold above, potentially that could be moving back down to at least these 4-hour lows. And you know, if we break last week's low, we could be topping out up there. All right, out of 3 time frames, so the monthly trend is down, possibly putting in slightly lower top once more. The day trend is down, the weekly trend is up. All right, so what do you reckon? Is gold too high up there, or can we continue up? As I've been saying, I've heard some economists saying it's going to, can't remember now the figure, 3,000, 4,000. It's got to get above 2,100 yet. What's that all-time high? It's got to get above, it's got to be able to get above 2074. So it's got to get above 2075 before we can get to 2,100, never mind 3,000. All right. And as well, you know, drawing a fib in here, 62 area there. It could stub up to the 79% level there, but it looks very heavy going now on gold. Slightly think it might just break above 2,000 once more, but it's starting to feel heavy. Yeah, it looks heavy going there for sure. I mean, irrespective of, you know, what economists think it should go to because of, you know, whatever fundamental perspective they have, you know, markets always pay on price. They buy and sell on price. And when you're starting to get to historical high points or historical low points, historical high points, the market will sell back down. Historical low points, the market will buy back up. All right, because, you know, people want to buy low, they want to sell high. Same as, let's have a quick look at oil before we go. This historical area up here at the moment on the day chart, where we gapped up, traded into these tops, just to prove the point. 83.23 to 83.29. Let's just call it 83. All these tops will average out about 83. All right, at the moment on the day chart there on oil, 83 is expensive. All right, we come back up to the expensive level that's been showing over the last 4 months. And we sell back down. I think as well there's a historical level. No, I'm telling a lie, but you can see all those weekly tops through there. All right. And when we got down to this low where there was some historical support, we move back up. All right. So sometimes the problem is if you're a new trader, you see an uptrend trading up to these critical price points and you think this is in an uptrend, so I'm buying. Well, that's the difficulty, is trends finish at high levels, finish at resistance levels and high resistance levels in an uptrend. And then downtrends finish at low levels and low levels of support. But at the time that you're looking at those low levels or high levels, all you're seeing is a trend, up or down. So you go, okay, it's up, so I'm buying, it's down, I'm selling, but then trends finish at high levels and low levels, okay? So that's where that difficulty can present to you. All right, that's today's analysis. Hopefully you got some levels you can work with over the next day or two. We definitely have a mix. We don't have a fully correlated kind of direction at the moment with pairs to the US dollar, for sure. All right, and key level on the dollar index to watch at the moment is this area that we're just holding above on the weekly chart, is that line there, 101.28. I don't know what the US news brings today, but we're just holding. I mean, potentially, we could put in a higher bottom on that level of support if we really want to. So let's just say we have a positive day today. And then we have a day up tomorrow. We're going to form a higher bottom there. Of course, if we have a negative day down today and another negative day down, then we're just continuing down. Barry is saying there's rising support on gold from the 21st of March. Well, let's have a look. Go back to gold. And now I'm opening another set of charts I don't want to do. All right, rising line of support from there. Yeah, I mean, irrespective of that low, I mean, you could go from there. All right, or you could be simply going from there. All right, there's also a declining line of resistance there. Which that was a fault, that top there was a false break. So if you use the first two highs there, that links with that high there. So what we end up with is, let's just get rid of that, is a triangle pattern, symmetrical triangle pattern. Which way is it going to break? All right. So if you're a buyer, you don't think gold's too high, you could be looking for a break above the triangle pattern to go long. And if you think we're too high, you're looking for a break below the triangle pattern to go short. All right. I'll leave that like that. We can review that on Thursday. All right. Thanks, Barry. All right, coming up tomorrow, we're going to go through imbalances. I've kind of touched on that last week in the order block webinar, but tomorrow we'll be on price imbalances. All right, I use those all the time. So with that being said, that's tomorrow's webinar, 7 p.m. If you want to get up to date on price imbalance, I use them all the time. They're really good for targets. They're really good for areas where price moves to and then moves from. So Matthew is saying mitigation levels. I just look for price imbalances to get filled for profit targets. And once they're filled, for price to reverse back down. So not quite sure what you mean by mitigation levels, but I just use them simply in conjunction with, say, fib retracements. They line up with a level I'm looking at on a fib, and of course, often where an imbalance starts from, there's an order block just above or below. as well. I touched on that last week. So I'm going to go through price imbalances tomorrow. And of course, tomorrow we've got a further webinar at 8 o'clock for the inner circle, but everybody's invited along to that one where I'm going to take you through trade setup on the 1 hour charts. So if you want to come along to that as well, I'll give you the invite link in tomorrow's webinar. All right, so if you have the time, if you've got 2 hours of time spare, you're not doing anything, why not come along and talk about trading with us tomorrow? All right, so that starts at 7 p.m. tomorrow. Thanks, everybody. If you're on our YouTube channel, thank you for tuning in too. I couldn't see the chat, but thanks very much for coming and watching. All right, everybody, have a great day. Thanks very much. See you next time.